The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 21st of October, and a very, very interesting day so far. Hey, thank you to Tom and Larry for great shows earlier on. Now, being Wednesday, straight after my show, you've got, I'm not sure if it's a re-recording, but then you've got Steve Rose. Stay tuned for Steve. He's got all these fantastic historical context that he puts the markets in, and he looks at the various indicators in his own unique way, and I think that's fabulous. Great learning experience there. And of course, you got Dave White, a Vector. Well, as far as Dave White is concerned, he's a Mr. Options specialist, and he had a great. I think you can call it a workshop. It was a workshop the other night. It was a webinar, but basically it was like a workshop, and discussing options plays, and he had a great options play this past week. And of course, you've got Tom O'Brien right back here, 3 to 5 program all the way through. Hey, this is very important. Now, sometimes I say this is a very important session, but I don't say it's an important session because of what's happening right now. It's an important session because of the close. And if it doesn't close, then it doesn't become an important session. So this is what I'm looking at right now. And I had a great question just a few moments ago before I came on the show. Someone in the den asked me about just a quick question. The question was S&P cash daily chart on September the 27th. The low was 1872. From that low, daily and leg C up, is that a legitimate labeling of daily chart? I'm going to go into that because every once in a while, there's a variation of the Chapman wave methodology. And it's something that I talk about this all the time. I can see visually in a split second what at this particular point in the Chapman wave analysis, if it was done totally computerized, it would be an elaborate juxtaposition of different variations, which one gets priority, etc. And then there would be like 3 or 4 choices. But in one split second, sometimes you can look at something and say, hey, this is what's happening. I know it's happening because of such and such and such. And sometimes it's just experience that tells you. So this is the tricky question. You know, Chapman wave is so easy in going from the lowest, most identifiable low bar to a peak D. That's one thing. But once you get to the D, that's where it becomes a little bit more complex. And this is what I'll talk about. First of all, there are patterns. And I believe these patterns recur over and over because they are just part of human nature's way of dealing with situations. And nothing ever changes historically. You can go back, I'm sure, 3,000 years ago, 6,000 years ago, and the same enthusiasm at the top would be there. And the same, I mean, you can, of course, you can go back. You can go back to the tulip, what is 1630s. The 1630s was the great tulip mania. And nothing changes. Okay, so now let's go. What am I getting to? Getting to something really simple. That I spoke about this yesterday. I spent a little time saying in the 120-minute chart, if you go back at the repetitive oval pattern that we had looked at back in, whoops, let me move this here, Chapman wave stalk leg formation. I discussed this back in early October when there was a very strong leg up in the 120-minute chart from 1883 to the 1980 level. And then there was a sideways move, and that was what we call the body. So you go leg, this is just a single leg up. Doesn't matter how many peaks because it is like a straight line move. Remember, markets move only in 3 ways. Straight line, up and down, arch, or cup formation. That's it. And this is a straight line. And then you get a series of cups and arches which form an oval. It is absolutely imperative in this particular pattern that it's not a rectangle, that it is an oval. And that oval pattern says you'll go sideways within a range, And then you break out to the upside, and that goes over the body, the oval of the body. 1991.25 was the top. And then you start the neck formation. That neck formation can go to the head. That head can be just a single move up and down, or could be far more complex. But once the beak starts of the stalk, the beak says you can keep going down, but when you get a turnaround, there's a very sharp move off the bottom, and then you're on your own. You've got to use other techniques. So where are we? We completed that move to 2014 round number high. Always look at round numbers. 1982.50 was the low, above the 200-period exponential moving average. Start another move up, not quite a straight leg, but it had all the characteristics. One of the reasons why is because you form this oval pattern. Let me go here, make it a little bit tighter. You can see right there. This is the 120-minute chart. Oval pattern, spikes up once, pulls back, and then has another spike today for the neck, the head, and now we're forming the beak. And this is a very critical moment. And there are a couple of reasons. Duck and cover. No, there are no ducks. This is just the stalk. Okay. Now, one of the things we're looking at, so I'm done with that. I'm going to put this down here. And then I'm going to show you something I discussed with Tom when I had an interview with him last night. One of the reasons why we have a mixed portfolio of longs and shorts, although getting fewer and fewer longs and shorts, is that there was this little pattern here. Look, leg, body, neck, and putting in the head pattern. What is this? This is GE. Had a spectacular move from 1937. I do know that there were people that got it in the very low 20s. Fabulous. We didn't. I didn't put it in as a buy because I've been using it as an indicator. But sometimes you really want to just skip that, and you've got a really great chart, man. You've got to go with it. Now what we're looking at, you've got the leg, got the body, not a very long body. Usually the oval body lasts a little longer, pops up to the neck, and now it might be pulling back. But in GE, can you believe that you've gone to a recovery high, like a 9-year high or something, in the move that we've just had? Is this a brand new leg B? We've already had a little buy signal here, so that 24.32 level was taken out. I have to consider that, I don't know how to count it. It's very unusual, this pattern. It is an expanding wedge pattern, one that you got to be saying, whoa, be careful. Expanding wedges can, when they snap closed like the mouth of an alligator or a dragon, snap they go, the price can go tumbling back down to the bottom trend line. But in the meantime, GE, a bellwether stock for me, in my Dow quartet, is acting beautifully. And the monthly chart, yeah, I could make a case that is just really a rare, unusual spike, but hey, I could make a case. It's not a brand new A in the monthly, but if it is an A in the monthly, by the end of the week, we'll be looking at this a lot closer, and then we're going to have different scenarios that we can paint. Okay, so let's just get, this pattern with that little body and the spike, what I was saying to Tom is that in the Chapman wave methodology, you've got to consider that when you're getting to resistance levels, in this case, the 200-period moving average was at 17,280, which I had been saying to subscribers, this is really a very strong resistance. But the longer it takes to get there and keep bumping up against it, the greater the chance that you might still get a little spike to the upside and then come back down into what would be the body. I don't want to get into that right now. Then to say that the MACD, the moving average convergence divergence in this daily chart of the Dow, is still very strong. The stochastic is stuck at 98%. At this point, day could change, anything could happen. But this is nice action. Hasn't even touched the 7-period moving average or this very important one here, the 9-period exponential moving average at 17,106. Not only that, there's this one right here, which is the 9, I believe. Yeah, this is the 9 smooth moving average. So when I see that the shorter term moving averages are above the slower one, I'm saying, okay, that says that we've got a limited upside, but it also says, wait a minute, at this particular stage, you've also got a lot of cushioning between 17,130 and 17,100. This is just a very near term. So those are the parameters. Now, let me go back to my original statement when I said this could be a very important session. At this moment, it's actually a fantastic session in the sense. Yesterday, we had IBM plummet. It should have dragged it down 40, 50 points. Instead, United Technologies, one of my four Dow Quartet, GE, IBM, Triple M, and UTX, took the baton. And the baton was up 3 or 4 points, and that helped a lot. Now look what's happened. So you get a doji candle, second one there. Today might be a third. We'll know later in the day. But now you've got the IBB being smacked because of Valiant. And Valiant is down huge. And yet, even the S&P is only down 1.5 right now. And the IBB's come back a little bit to only -5. So I'm looking at this and I'm saying, there is enough internal strength with the rotation of strong stocks against the rotation of the weak stocks that, in fact, we might be seeing a little bit more, maybe not so much upside action, but the holding pattern. And remember, rectangle formations can last a lot longer than your patience. I'm out of here. Let's go finish that up. I just wanted to check. The VIX is down at 1532, down 43 cents. In that 15s to the 14s, it's saying, hey, there's still buying pressure. So I'm just treating it very simply. Now let's go on to the next thing that we wanted to do, which was to just run these numbers. INDU, we'll do this before the break. So here we go. The Dow is up 28 to 17,245. You see that inside track, Chapman Wave inside track resistance, and you've got the 200-period moving average. This is a very important period. See the weekly chart in leg B in a V-shaped pattern, but I still have drawn in the arch formation. I'm saying there's a real good chance within 2 weeks we'll start to be pulling back underneath the 16,700 level. All right, let's go on. S&P SPX.X is up. Now it's down 93 cents, made a peak E. Now the question I had in the den, now I can go to that question, was can this really be a brand new leg A? Well, A, B, C. And my answer is that everything about the MACD and the stochastic suggests that that was the low, 929, not the 825 low of 1867.01 in August, on the 25th of August. So everything about this so far is saying, not so much the 120-minute chart, that's saying be careful here, but the daily is saying, yeah, you might have a pullback, but it looks, by the character of the technicals, that there's still enough residual strength to push it a tad higher. Let's quickly do these. IWM is down 69 to 114.78. One of the weekly and monthly charts, the QQQ series holding much better. It's up in leg C, made another leg C extension today, just holding very nicely. It has 107.34 support and 108.80s probably is the resistance, and it's at 108.21, up 3 cents. You've got gold, and this is going to be very interesting. Why? Because gold is down 12 at 11.66 after a peak D. You've got bonds, and it's going to be really interesting. Nice move up in bonds. The TLT is up 115 to 123.98. And as we go out for our first break, we've got the dollar holding quite well. Not great, but holding okay above the 200-period moving average. Basil Chapman, Target Technicians Hour. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let me just answer this question quickly. We're up 51 in the Dow, 144 in the S&P. BP is a question of the day. Can I do an analysis? Basil, can you please? Where did it go? Disappeared. But Basil, can you look at BP for a long? So this is going to be very interesting. It's a 35.34. The MACD is really good. Stochastic was higher than 82%, and now it's pulling back in the daily. The weekly chart has a crossover in the MACD, positive crossover. Stochastic's running. It's at 45%. Nothing great, but it is at 45%. And it's holding the 9-period moving average of 34.27, being at 35.35 right now, up 38 cents. There's a Chapman Wave falling axe pattern. Remember what that is? That's a declining cone, just looks like an axe. What is it? What is a falling axe? Falling axe looks like this, and then it has a series of lower highs and much lower lows, like that, right? So what happens is that as soon as the price starts to close above that dash trend line resistance, it immediately targets the first left side peak and then the high of whatever we're looking at, which is usually not that much higher because this is a series of lower lows and much lower highs and much lower lows. So the lower highs, once you start to break out, you're getting close. And that would say that at 35.34, all you need to do is to break above 36.31 for leg C. Number one, it's at B. Number two is the moment it starts to track 36.71, 36.80, then the 37.84 200-period moving average that was really strong resistance. It was a little bit of support. It was resistance. Bam, it went right through. Then it became support. boom, it went right through that. And then that resistance became extreme resistance from the moment it broke back on the 26th of May. Every time we tried to get near there, it failed, and then it just went further and further away. Now it's getting closer. So that says to me, Jane the Den, yeah, I would do this. It's been smashed to the downside. This is a counter trend rally. Because it's gone above the low, on the left side low of around about 34.90 back in January, and it has closed twice, 2 weeks above that, my suspicion is that the Exxon, BP, Chevron are going to be harbingers of the momentum, not the velocity, but the momentum of this move to the upside as a counter trend rally. And that if they break, in other words, if BP takes out 34 support, if Chevron, CVX, takes out, no, it's made a PED already, it's at 90.22. If it takes out 87, yeah, I'm going to go all the way to 87, 87.50 on a close. If Exxon, ExxonMobil, peak D, up against the 200-period moving average, if it takes out 78, and it's at 82.90 right now, that's going to say that there's a real good chance that the S&P and everything else is going down. At this point, I'm looking at strength. So my answer to you on BP is, yes, I would start a position. Now, if you're doing it for the dividend, please check to see when the dividend is paid. That's your business. All I'm doing is looking at the chart. I would say yes to a position, and I have to call it a starter position. It's a starter position at 35.34. My stop on this would be not at the low of 34.46. I'd give it just a little bit more. I'd give it a stop of 34. A point and a quarter. So you're going to be down at the 34.30 level. A close below that says, uh-oh, now you got to be careful. No, I'm 34.20 level. A close below 34.20 says, don't be careful, okay? Now, this is a two-part plan. Small position now. Well, I'm not going to tell you your position. I'm going to say, because you might be thinking of a dividend, so there's a whole bunch of things that are involved. Me, I would start a small position right here, 35.31. My own personal thing is that I wouldn't want it to go underneath 34.90. This is just the way I'd be doing it. Why? Because if this rallies and if BP takes out 35.91 on the 120-minute chart and holds that for 2 bars, all of a sudden you're above this declining trend line, the falling X trend line, and you're looking at a test of the 36.31. All it needs to do is to go to 36.32. You start at leg C, and in this particular move, there's no guarantee in the weekly chart that you're going to go to a leg B, but there is a guarantee in the daily that if there is enough strength to get you to a C in this cup, I don't have time to do it now, but in the cup formation, I've got until about the 27th or 28th to try to test the 37.84 level. So 1 penny above 36.31, I'd add another position. That position has to have a very small stop, a very short stop, because this is the one that the break of B has to be quite powerful. And then once you've done that, I'd have the 2 positions. I'd make sure that the first position, there's no loss whatsoever. I'm going to make profit. And the second position, I'd have a trading stop, see if you can get the C and then the D as it gets close to 37.84. Hope that helped you. And that's BP that we were looking at. I will be back straight after this break. Dow's up 46, S&P's up 147.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So, I just got a whole bunch of questions. This is like I should take the whole day here and just start explaining things, but I won't. I'll do it as succinctly as I can. So, Julie sends an email saying, if I can look over there to see what it is. So Julie says, it disappeared. Oh, there it is. You show leg B weekly in Indu. That's the Dow. Needs C and D. Okay, so let me just talk. It was the same question as I had in the den. Here's the question, and it's a great question. This is one of the very few times I can recall doing it in so many of the charts. Let me make this bigger. This is really important. This is the reason why I said it's such an important session, but it's only an important session if the Dow closes somehow other in the 17,300s because it does something completely different, or it breaks down and closes under, say, 17,120. All right, so here we go. You see this here, this takeoff phase from the August the 24th low in the Dow at 15,370. Well, this could be the S&P, they're all the same. And you see that Chapman wave Roman candle. I have a specific, for my subscribers, there's a specific formula that I use when it's a doji candle at the top or when it's a doji candle after a big move down. There are characteristics that you look for. And this had all the characteristics of an H pattern that goes to a lowercase m pattern, lowercase h to a lowercase m. And then you've got to see where it stops. Does it go back into the 15,500s? Or does it stop just at 16,000? Well, what happened is this arch came down It went to 15,942 in the daily Dow chart. What I've been discussing with subscribers for a while is that every one of these candles, you remember, what is the rule that I have? That in a buy mode, the best thing is to have 136. One is the best. That only intraday, or at worst, is just one day, maybe 2 to 3 days, but you make new higher highs, higher recovery highs. And in the bear phase, you just want to like vertex. You just want to plummet down, 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 down. And you don't want to have any breaks or a day or pop up and then it goes to a lower low. Well, look at this. The characteristic with the stochastic and the MACD and everything says that this is a powerful move. Now, you haven't had a powerful move in the last few days. So let me just say that the characteristic of this move from the 29th of September in both the Dow and the S&P has all the characteristics of a takeoff that should take you to a C and a D. And this should be A, really, technically it has to be D in the Chapman Wave methodology. But if there was actually a restart and this was an A and a B, I'd expect a C and a D. Just the characteristic of these candles. I'm going to go to our first call in a moment. See the character. We've only had one ugly down day. And this is 16, 17, 18, I don't know how many days, and we haven't had a down. This is bullish. This is, you can't fight that. At least I'm not going to fight it. Okay. Now the question about the weekly, just to say, put it succinctly, this is leg B. I'm going to go to Ben in Tallahassee right now. I'm just going to say it's gray B. I'll explain it in a short while. Ben in Tallahassee, how are you?
Good, Basil. How are you?
I'm pleased you were able to stay online. So you wanted to look at?
Yeah. If you look, are you there?
Yes, I am.
Oh, great. Hi, Basil. If you look at the XLE,
yes,
on a daily and a weekly,
yes,
the daily to me looks extremely strong, and it looks to me like it's still in a peak C.
Correct.
And then if you look at the weekly, if it remains under this 69, or if it right one tick above the 69.67, this baby's going to be in a leg B in the weekly, and it sure looks like it could do that.
Well, I've already got it in leg B. Don't you have it in leg B already?
I'm sorry. Wait a minute. Yep. So,
yeah,
there you go. So then it would be C, and we're off to the races. It could be very long-term situation.
So let's just put this in perspective, folks. We're looking at the S&P Select Energy Spider ETF, made a peak G at 101.52 and plummeted down to the 58-ish level just recently. And now it's having a pretty good, it's just a fantastic single leg A up, even though it's leg C. This is the same characteristic that I'm looking at in the other indices. So what we're looking at here is the characteristic from the 29th of September in this XLE daily chart is not, it never had a single peak until it went to the high of 69.67. Then it pulls back and it's gone in a sideways pattern. Now, I have one little problem with this, in that the pattern we're looking at has the pattern that says it's a lowercase h, and if it breaks it closes under 64, it needs to close, not just break, it needs to close under 67.04, then all of a sudden you've got yourself the sideways trading pattern, which says that, and this is really what I'm looking at, Ben. I'm looking at this as really just an arch formation. On a shorter term basis, today, the candle of today is all wrong. The candle of today should have held the 9-period moving average at 67, where it is right now, at 67.84. And it should have been a tad above yesterday's high of 68.38. And it says to me, within the makeup of the XLE, there are problematic stocks and there are really strong stocks. And that's really what we're looking at here. So I think the monthly chart has an A to B equals C to D, the lightning bolt pattern. My target would be 57, big test of the 57s. But on a shorter term basis, I think we're looking at time rather than price in the XLE.
So I'm sorry, just to clarify, Basil. So you're seeing this short term as not making the leg D in the daily, and rather extend lower.
It still could make the D, but it better do it real soon because of this H pattern. The H pattern says, well, the day's young, but the H pattern said it shouldn't have taken out yesterday's low. because that's hinting that there's more downward side pressure. The MACD is still
are you
good.
looking at the 100? Are you looking at the 120?
No, I'm looking at the daily. The 120-minute chart is actually holding, as the platform is holding 67.04. Actually, I can make it real easy. A close below 67 says that the upside is limited, and the best you can be seeing is an arch formation. And it could have certain spikes. It has these single leg spikes to the upside, so it could do that again. The best case scenario says that by the end of the day, it closes towards the high, and by tomorrow, it doesn't even look back. It just takes out yesterday's low, yesterday's high of 68.37, the day before of 68.58, and it just pushes real quickly. That means by Monday of next week, Tuesday at the latest, it actually has gone to from the C peak C1, C2. It's actually made leg D, and the leg D, as you say, would be 67, 69, 68. So I'm making it real quick now. The question is, do I buy it, or do I like to look at something and say, would I buy it and would I sell it? Because of the downside move, because of the sideways action, because of the technicals in the weekly, my bias here would be to say I'd rather have risk reward of less than a point. Let's make it a point, 66.
Yeah, well, I already own it, so it's easy for me. But for new people new
Right.
to this, I agree. Yeah.
So my thinking is this: that I don't want it if it's going to break. Certainly not break the low of today, but I do want it if it's holding well. And I've got a 1 point to the downside, but I've got about 3 points possibly to the upside. So 1 in 3 says that my risk reward is good, but it's already taken off very strongly from the bottom. So now my position has to be that I'm not going to get a full position, maybe a half to a 1/3 position right here with a 1 point stop would give a 1 to 3 advantage.
And
But
one
yeah,
other quick
thanks for
comment,
bringing
Basil, on the daily. When you look at that, I see what you're saying about it being under the 9 EMA, but you can also say that it's formed a nice base channel, right? You can draw a line underneath several different days where it never dropped below that point.
Correct, and the same thing, and that's why I'm looking at the 120-minute chart, which so far on a technical basis is saying this is a good consolidation after such a spectacular move. So that's why I'm saying that the risk seems to me, you got a little downside here, but I really would not like to see it trading in the 66, 70s, because that's going to suggest it needs a little more time, and then there's a possibility of a sudden break to the downside.
Great. Thanks a lot.
Yeah, thank you and good eye. Thank you for calling, and nice position you've got there. Let's go to Robert in Chicago. Robert, how are you?
I'm very good, Basil, and thanks for taking my call.
My pleasure.
So I have a question for you. Would you buy it or would you sell it, Procter & Gamble?
Okay, now you see that's a great. I love questions like this. Why? Because you've got one of the weakest Dow stocks going from the 94. What was the high? 93.89 back in December. Plummets down. It's a 30% correction down to 65.02. Now it's at a peak D in the daily, a nice bounce from that low. And the weekly chart, see, this is what I'm sorry I didn't see this chart before, because Ben would have been impressed with this. So Ben, if Ben is listening, Ben, you see the way it's gone to peak A and peak B, and I have to call these gray. This is the question that was asked of me by Julie. Is it not Dow B? Yes, it's a gray B, meaning it is way under the cascade of the waterfall cascade of the Grand Canyon, right there, just like Procter & Gamble had from the 24th of July, plummeted down from the 83-ish area down to the low of 65.02. Okay, so here's my answer to you is, this goes into the category of defensive, not defensive like Raytheon, but defensive stocks. These are the stocks that in a down move, what you're looking at is people look at this as both two ways. They look at it as a dividend stock that'll pay you for risk, and it also is a stock that very often works well when let me put it this way, the higher PE stocks are pulling back. I think that's the best way to discuss that. Now look at what's happened. It's above the 9-period moving average in the weekly. This weekly is slowly improving in the technicals. I still have to quickly draw in right here up to the 9-period move, 200-period moving average of 76.62, an arch formation. So my answer to you is, I saw this just recently, and I thought, wow, it was, it's had this perfect stair-step move, but on each stair-step move, you had to see if it was going to hold the 9-period moving average. Today, it broke the 9 EMA after a peak D. So my answer to you is, I wouldn't step in right now. If I was in it, I'd be holding it. But I'd say if it, at 74.36 Procter & Gamble, down 8 cents today, if it took out 72.30, somewhere around 72 over the next 2 weeks, then it could start that move back to the downside. So I would prefer to say to you, normally I'd look at it right away and say buy or sell. No, in this particular instance, I would like it to test somewhere about a point lower. And if it can just hold that position and then have a bounce, I'm prepared maybe to buy the bounce. I'd rather be buying strength than weakness after this peak D, because it's still quite a distance away in the daily chart from the 78.06 200-period exponential moving average. It might take a little bit longer. It might take a little dip and then a slow move up towards the end of October into November if it's going to remain a defensive, attractive stock for dividend and capital growth and dividend. So I would be looking at it. It's only a point, but it's a big point, because if it goes to the 73.30 area and it starts to hold all these support levels above 73.20, that would be very nice for me, because the weekly chart would be taking its time to rebuild some energy. So I would, if someone said to me, hey, wait, if you are thinking of buying it, why wouldn't you nibble right here? Then my answer would be yes. I would actually just start a very small position, but the real position, it would still be a small position, would be between 73.50 and 72.90, somewhere around there. I'd like to reassess. So as a stock that seems to be doing quite nicely in the dividend category, in the area of defensive stocks, I like it. I'm not sure how long it's going to last, because my monthly chart says it's going to come back down and probably test the 68 to 65 level, maybe in November. But just in the shorter term, as a trade, I'd say, yeah, a little position, wait for it to test the 73.20 to 72.80 area. If it does, then it actually starts to rally, I might then add a little bit more, and I would still keep a fairly strict stop, because I don't want to take a stock that has dividends and lose that dividend because the capital gain turned into a capital loss. But as a longer term, intermediate to a longer term position, it needs a lot of work to be able for me to say, I would like to buy and hold it. But if you got it much lower, you've got a very nice cushion, and you've got the cushion, as I say, of the whole 72 area. But most importantly, even today, it pulled back and now it's trying to come back. If I can tell you this, if Procter & Gamble can get to the 75.50s by this time next week, by a week from today, Wednesday, then I'd say to you, hey, that 76.62 area could be a magnet, and then it could go a little bit higher, and then I start to be careful. But in the meantime, so that's 2 points. It's like 5% capital gain, and what is it, about a 4.2 or 3.8 dividend? I'm not sure. I'm just guessing. But that's the way I would do it. Just wanted to clarify. Short term, looking quite good. Intermediate term, a little bit more upside, and then I'd be careful.
Okay, great. It does, Basil. Thank you very much.
Thank you very much. Always appreciate your call, Robert in Chicago. Hey, Robert, are you there? I guess Robert just went off. I think Robert had Whole Foods at one point, and I wanted to ask him if he... Anyway, so I was looking at Whole Foods the other day, WFM, and it too has had a tremendous decline to the bottom, but now it's starting to find some support. But actually, this will take me, in the final section, I want to do a little bit, I want to talk about the states move quickly to take on Volkswagen over emissions cheating. Oh man, are they going to smack this foreign company? General Motors gets away with everything. General Motors looks fantastic. And Madoff, I'll talk about that when I get back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. So this is the 10-minute chart. Just I know that there are traders here that like to look at these different things. So we had left side, right side price time action. The E-mini 10-minute chart went to peak F, pulls back, and comes back down, goes to peak C1, C2, pulls back, makes a lower low. So this has to be considered a new rally mode. It isn't the buy mode yet. But what's most important is that you've got a trend line right here that says this is the level to break. If this is going to be going higher into the afternoon session, you must see a break of 2030 in the E-minis and trading at 225 right now. So, okay, get that out the way. So there are a whole bunch of questions. So we had the XLE. Now, I did want to do two things here. Okay, so Julie, let me go back to this because there's still a discussion in the den. In a retracement mode, when you've had a very sharp sell-off with the left side high, in this case, let's just go to the peak A minus that was the week of the 24th of July when the Dow was at 18,137. It plummeted down to 15,370. So this gets what I call the gray letters because it's under that. And until the stochastic really goes to 80% where I can put in an up arrow, I have to call this a retracement failure mode. It can fail at any point. It doesn't have to complete. That's the thing to remember, that in a retracement mode, you have to be using a number. It's not as simple. Sometimes it's real simple, but you've got to treat it as if it could fail because it had such a severe decline before. In the meantime, the MACD has crossed positive. That's that doesn't change anything. It just means you've gone to a buy signal, and you've gone with the stochastic and at 55%, having gone under 20%, and the price is moving higher. So you haven't yet got a buy mode, but you've got a buy signal. Now, I hope I answer the question, which means that in a retracement mode from a serious sell-off, you put the letters in, but I call them gray A, gray B. When you get to C, that's when you can say, okay, I think that now we're going to go to a D. I can put in an up arrow. I've only got a plus sign right now. So that's important to note. That's number one. Number two is you also have to look at the shorter time frames, because this is the rudder, the daily. Actually, the 120-minute chart is the rudder, and it's just extended to leg C in the 120-minute chart. So as but no, don't just talk. Let me just 219.18 to, oh, just as well I did that. That's BC. This is in leg D. Brand new. This is a buy mode in leg D in the 120-minute chart, but very, very strong so far. So that's the way we're looking at it. So you have to go from time frame to time frame for verification. Also, the stochastic's at 98% in the daily chart, and the MACD is very strong. This is good action, and look how it's attempting to smack that 200-period moving average. It's now at 17,287. So I hope I got that out the way. What I wrote down? Oh, states move quickly to take on Volkswagen over emissions cheating. This is like the tobacco. Because especially since it's a foreign company, they are going to give Volkswagen, I mean, when you turn around and look at it in the end, VW is going to get smacked. AGs, that's the assistant generals or attorney generals, see millions at stake in case where company has admitted fault. And here comes the politician. Astonishment bordering on disbelief that a company could be so absurdly arrogant and lawless. Richard Blumenthal, Democratic senator from Connecticut. I don't disagree with him at all. It's the result. And they are going to get smacked. Now, of course, there are no deaths that we know of, but General Motors had, 100 and something deaths? General Motors trading at 35.46. When you are out of the political spotlight, you can do almost anything as a business. When you are in, there is nothing that you can do that'll make it right. Volkswagen could say, I'll give every state $7 billion. Every state in the United States. No one will be happy. No one will be happy. Why? They're going to squeeze us as money from heaven, manna from heaven. Okay, so watch this closely. If the Dow turns around, 17,200 must be support. If it keeps pushing up and closes in the 17,300s, that's another positive. I'll be back tomorrow. Have a great day. Check out my opening call. I think you'll find it interesting.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,